Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 top tech stocks to watch following their Q4 reports. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. As the fourth quarter earnings season comes to an end, I thought it'd be a good time to take a look at a few hidden gems in the tech sector that maybe get a bit overshadowed by big name stocks like the Magnificent Seven, but have seen a handful of analysts enthusiastically increasing price targets following a strong fourth quarter report. So today, we're going to take a look at these companies, what it is that they do, what they shared in their fourth quarter, and of course what those analysts are predicting for the stock's future. I narrowed in on these stocks using the TipRanks earnings calendar. Found under Tools in the Calendar menu with the earnings calendar, not only can you look ahead to see what companies will be reporting, but you can look back and see how other companies' results did come out. It gave us our list here down below, and I looked for companies that came out with an earnings beat and had a strong buy consensus. Just before we jump into today's stocks, this is a friendly reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can follow along with these stocks over on the TipRanks website or right on the TipRanks mobile app, which you can download by following the links in the description down below. Now let's jump right into these strong buy tech stocks. First on the list today is a company called Klaviyo. They trade under the ticker KVYO, currently priced at $43 per share. They are fairly new to the public market, IPOing back in September of 2023. Over the past year, the stock has climbed 52% and is up 18% in the last 3 months. Klaviyo is a technology company that provides a software-as-a-service platform, enabling their customers to send the right messages at the right time. Through email, SMS, and push notifications, they offer a marketing automation platform that sends personalized and targeted messages. Its products include email marketing solutions to track every click and purchase to optimize campaigns, SMS, a text marketing solution for e-commerce growth and retention, and mobile push solutions that reaches customers directly on their lock screen. They integrate with over 350 platforms like Shopify, WooCommerce, and Magneto to consolidate customer data like purchase history, browsing behavior, and preferences into comprehensive profiles. Shares have fallen nearly 8% since their fourth quarter earnings report yesterday, where they came out with an earnings beat and their largest revenue beat since their IPO. For their Q4, they reported earnings per share of 7 cents, beating analyst expectations by 1 cent per share, and revenue came in at $270 million, growing 34% year over year and beating by nearly $13 million. Full-year revenue also grew 34%, coming in at $937.5 million. Investors might be disappointed that the company's new pricing model didn't drive any further upside to their revenue guidance. But during the quarter, they did see international revenue grow 41% year over year. They added over 6,000 new customers, with a notable increase in customers generating over $50,000 in annual recurring revenue, positive cross-sell momentum, and introduced several new features, including enhanced email AI and expanded SMS support to 18 countries. In just the past 24 hours, we have seen 17 Wall Street analysts weigh in on the stock, many of them increasing their price targets. An analyst from Mizuho noted the Q4 beat, driven by a strong holiday shopping season and traction in both the mid-market and internationally. They believe Klaviyo's 2025 revenue growth guide of 23 to 24% could be conservative and sets the company up for a beat and raise cadence. Another analyst from Stifel noted that it was the largest revenue beat of the year, and on the back of the strong quarter, management offered a Q1 top-line outlook that exceeded expectations. And with 19 current analyst ratings altogether, the Klaviyo stock does come in as a strong buy with 15 buy ratings and 4 holds. The average price target of $52 implies an upside potential of 20%. And looking at those ratings down below, you can see all the analysts bumping up those price targets, a lot of them in the 20 to 30% upside. Our low-end price targets are a couple at $45 for an upside just shy of 4%, while our high-end price target is $60 from Loop Capital for an upside of 38.5%. For our second stock today, we're taking a look at Wix. They trade under the ticker WIX, currently priced at $207 per share, having climbed 55% over this past year, but they are down over 5% in the last 3 months. Wix provides a cloud-based platform primarily used for developing and designing websites. Wix empowers anyone, from bloggers to businesses, to build and run an online presence with ease, blending user-friendly design with robust tools and AI. Their flagship offering is their drag-and-drop website builder, which lets users without any coding skills design professional websites using customizable templates or AI tools. And beyond basic websites, they also offer integrated tools like e-commerce, bookings, email marketing, invoicing, and analytics. Wix reported their fourth quarter earnings yesterday and did have mixed results with an earnings beat but slight revenue miss. However, the quarter did include several other highlights. For their fourth quarter, they reported earnings per share of $1.93, beating analysts' expectations by 34 cents per share, and revenue came in at $460.5 million, which did grow 14% year over year, but fell $0.9 million short of analysts' expectations. For 2025, they are targeting $2 billion in revenue. During the quarter, they did exceed their ambitious plan to achieve the Rule of 40 by 2025, reaching this milestone a year ahead of schedule. They saw strong bookings and revenue growth and generated free cash flow of $488 million, nearly doubling from 2023. Within the last 24 hours, Wix has had 16 analysts weigh in on the stock, once again, many of them bumping up their price targets. An analyst at Barclays said that the company's bookings growth and free cash flow guidance is ahead of consensus at the high end and should be well received, even as Q4 revenue was a tad light. They believe Wix's story is still intact, but says there might be a higher bar from here execution-wise for the stock to start working again. An analyst from Citizens JMP said that they continue to recommend Wix, especially on any pullback, and an analyst from Morgan Stanley said that their Q4 results brought a strong end to the year, while better than feared fiscal 2025 guidance reflects durability and growth. With 21 current analyst ratings, the Wix stock does come in as a strong buy, but we do have a few mixed opinions here as we have 17 buys, 3 holds, and even 1 sell. The average price target comes in at $248 per share, implying an upside potential of 20%. Looking at those ratings down below, on the low end, we do have a hold rating at $189, implying a downside of over 8%, while our high-end price target is $300, implying an upside potential of about 45%. If you've made it all the way to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least, we're taking a look at HubSpot. They trade under the ticker HUBS, currently priced at $746 per share. The stock has climbed 26% in the past year, and in the last 3 months is up slightly at 3.7%. HubSpot is another software-as-a-service company. They offer an all-in-one platform for marketing, sales, and customer service. Their mission is to help businesses grow better by attracting, engaging, and delighting customers through a seamless, data-driven approach. They pioneered inbound marketing, drawing customers in with valuable content rather than outbound ads. They offer tools for blogging, SEO, social media, landing pages, email campaigns, and AI-powered content creation. In summary, they help businesses attract leads, convert them to customers, and keep them happy, all in one platform using inbound strategies. HubSpot shared their fourth quarter earnings report just over a week ago on February 12th, coming out with both an earnings and revenue beat. For their Q4, they reported earnings per share of $2.32, beating analyst expectations by 13 cents per share, and revenue climbed 20% year over year to $703 million, beating by over $29 million. For 2025, they're projecting $2.99 billion in revenue and an 18% margin driven by AI adoption. Their subscription revenue saw a 21% year-over-year increase, and they saw their operating margin improve. On top of that, their customer base expanded to 248,000 customers globally, with over 9,800 net customer additions, and their user base of their agent AI grew over 10 times in 6 months, reaching over 500,000 users. Since that fourth quarter earnings report, 24 Wall Street analysts have weighed in on the HubSpot stock. An analyst from Scotiabank said that the company's billing growth was nicely ahead of consensus, and the firm sees shares continuing to work despite the stock trading at a premium compared to its peers. Another analyst from Truist said that they reported strong results with beats across the top and bottom line. And an analyst from Raymond James said that the initial 2025 growth outlook was roughly in line with the street, excluding foreign exchange headwinds, and that recent packaging changes are resonating, and that the firm likes the chances for HubSpot to continue its beat and raise cadence. With 26 current analyst ratings, the HubSpot stock does come in as a strong buy, with 21 buys and 5 holds. The average price target comes in at $887, implying an upside potential of nearly 19%. Looking at those ratings down below, you can see nearly every analyst bumped up their price target following that earnings report. Our low end is a hold here at $775 for an upside of 3.76%, while our high end price target comes in at $980 for an upside of 31%. So, that is a quick look at three tech stocks that analysts have been bumping up their price targets on following those Q4 reports. Let me know your thoughts on these companies in the comments down below and what other companies that you've been watching since their latest earnings. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own research and due diligence. Thanks so much for watching. Have a fantastic day. I'll see you back here next time.